Morning and to our HCD CalHFA Audit Handbook webinar. My name is Stephen Marshall. I am the Section Chief for Asset Management and Compliance branch in the Fiscal section. And we have staff from both HCD and CalHFA who will be presenting today. Because the name is a little bit too long, Audited Financial Statements Handbook for Multifamily Rental Housing, we will just refer to it as the Audit Handbook or the Handbook. It was originally developed in 2013, and as you can see on the cover here, it was just revised this month, 2023, and it is posted to both of our web sites, both HCD and CalHFA. So George Rodin, our senior specialist in AMC, is going to be handling the presentation. So if we can click forward here, the forward, we are going to be hitting the highlights. We're not going to go page by page. It's a 92-page document, so we'll try to get through it so that there's enough time to answer some questions. The forward basically states the reasons for why we require certified financial statements, why we require audits. It also provides the link at the bottom of this page to the handbook itself in the CalHFA website and the HCD website. The link here in the book, just so you know, is generically to the HCD website, but I've just dropped into the chat the direct link to the handbook itself. The reason we did that is because our web pages are going to go through some revision soon, and therefore this link might not be as direct. You'd have to navigate a little bit. So it's in the chat now. So we're going to leave you to read the forward so you'll understand some of the purposes behind the audit handbook itself. Next comment, please, George. So this first table of contents at the beginning of the handbook has hyperlinks within the document itself. It'll jump you to page 3, 5, 6, 7, or the appendixes A, B, or C. The other tables of contents within Appendix A and B are not hyperlinked, just so you're aware. Now we're going to go to the introduction. The introduction here explains how HCD and CalHFA monitor to our regulatory agreements that are recorded against the projects as restrictions on the ownership, the operations, and the management of these affordable housing projects. And it's applicable to all of the programs that are noted. We've got lists of both HCD and CalHFA programs. And one of the things that you'll notice is that some of the programs have a note to the side, and it's typically in red typeface, where it says a bifurcated audit is required. This is one of the main reasons we updated the entire handbook, is to provide both instruction and samples of bifurcated audits. We'll get to Exhibit C later, which will explain and give a visual illustration of the bifurcated audit presentation that we're going to be requiring. But just so you know, all of the HCD programs and any new programs that are created over the next few years, they're going to be applicable. They're going to be falling under the authority of this handbook. Same for CalHFA. So if we ever develop a new program that's not on this list, it would have to be specifically excluded. Otherwise, please do follow the requirements in the handbook for all of the programs.
So one of the things, Steve, is that we've indicated in these programs which ones a bifurcated audit might be required. In these programs, some of the projects might get COSR funding and some might not. It's those projects that receive the COSR funding that would need to submit bifurcated audits, and so.
All right, great. All right, I'll turn my camera off here so we can focus on the screen. Next, after these lists, we'll jump to the page 3 to 6, which is our owner responsibilities. So here, what we're talking about is the project owner, which is sometimes they're called the sponsor or the borrower, project owner, both at HCD and CalHFA. Those terms today and throughout the handbook, as well as our standard documentation, those are interchangeable. So however we regard or mention it, it's the project owner's responsibilities to engage with an auditor, to maintain the records, and prepare and present and submit audits in a timely manner in accordance with the rules of the regulatory agreements, the program regulations, and this audit handbook. The bold section at the bottom of the page basically says the audit must include supplementary information in the notes to the financial statements and the supplementary information of this audit handbook. We're going to get to that in a couple pages, and the appendices are really nothing more than a sample, but you should take these as basically as the requirement of how you should be presenting your audits at the time that audits are due. And the audits typically are due at HCD 90 days after the end of a fiscal year. The next comment, please, is on the top of page 4. Here we have a brief description of each of Appendix A, B, and C. Again, it's part of the owner's responsibility to understand which appendix, which format your audit should be presented in. And this is a quick description of where it is and what the requirements are. Appendix C, again, one of the primary drivers of why we've revised the handbook itself is to cover the bifurcated audits, and that's when a project has a capitalized operating subsidy reserve known as a COSR, or for our RHCP original program, the annuity, the annual annuity in the RHCPO and HLCP programs. For HCD, COSR funding is new, so it's not going to be needed on a lot of the older programs, except if some of our legacy loan programs have been awarded new funding through our portfolio reinvestment program, through the PRP. And if those PRP award projects have a COSR, they also will need to prepare and present and submit an audit that has Appendix C format to provide the information of a bifurcated audit. All right, next
So
comment,
just
please.
to reiterate, Steve, Appendix A is pretty much the standard format that's used by most of the projects, probably 90% of the projects, for all projects that have HCD, except for the COSR and the RHCPO projects that Steve mentioned. And it's also widely used by CalHFA as well. So Appendix A is really the primary appendix you're going to follow when submitting an audit. And then Appendix B is for CalHFA projects with a project with no HCD funding, CalHFA, if it has CalHFA administered HUD Section 8 or HUD Section 8 with a requirement to submit audits to HUD REAC as part of the financial assessment subsystem. Now, this is a very small amount of the CalHFA portfolio, so Appendix B generally, is not widely used, but it's included in here. And check with CalHFA if you have any questions about Appendix B.
All right, and we did just get a question in the chat. What is the COSER funding? Capitalized Operating Subsidy Reserve. So it's a reserve account that's, in many cases, it's an operating reserve too, in a way, but we'll get into it more when we discuss Appendix C. It's a reserve account specifically for the shortfall in revenue compared to expenses of COSER eligible units. So we need to attribute revenue and expenses specifically to those units compared to the rest of the units in the building. And therefore, we would be able to determine by calculating that, the difference, we'd be able to determine how much of a disbursement the project is eligible to receive out of the capitalized operating subsidy reserve. And COSER disbursements are once a year. So we use the audit to verify the actual amounts attributable to the assisted units that are eligible for COSER disbursement, and then we can make that disbursement to the project. The HCD can make the disbursement. And there are COSERs in the MHSA and the SNHP programs at CalHFA as well. So that's what the COSER stands for. All right.
Yeah, it's similar to it's just like an operating reserve, but it only relates to the assisted units, the COSER assisted units, or the just general assisted units. So it's like an operating reserve.
All right. So next slide will take us to a note regarding the first audit, which is still part of owner's responsibility. Just to let you know that the first audit is due after, firm closing 90 days after the end of the fiscal year in which the permanent loan closes. There may be some slight differences for projects that have tax credits if they're being required to submit an audit based on first year of operations. If you have any questions on the timing of the first audit requirement, please contact your AMC fiscal representative or your CalHFA asset management representative. We also at HCD, we will allow up to an 18-month first year. If you close perm, let's say in September or October or November, we don't want you to have to create an audit that is covering just November and December and go through that expense and effort to submit a 2-month audit and then another next year, a full year. We'll wait till the end of the next year and then you can do a 14-month audit. So this section of the handbook will give you some of those rules. The next comment is at the bottom of that page 5 regarding separate financial statements. Basically, we need to get a separate audit, separate financial statements on each project. We really discourage consolidated audits. It will no doubt delay the time that it takes to review and approve. We'll have more questions. So please follow our request. Both HCD and CalHFA, we want a standalone audit for each project. So even if you own many projects, and a lot of our developers and sponsors do indeed own and operate many HCD funded and CalHFA funded projects, please do submit separate audits for each project. So now we will go to our next comment. Engaging the auditor. Again, one of the owner's requirements, you have to have an auditor that we actually do not have a recommended list, but if we see that your audits are not being presented in a proper format with following proper rules of generally accepted accounting standards, generally accepted government auditing standards, we're going to ask you to get a new auditor at some certain point. So that's again something that falls to the owner's responsibilities.
Yeah, Steve, one of the big things that when we revised the handbook in 2013, we required that the operating revenue and expenses be captured in the HUD chart of accounts, so that we had standards, kind of the industry standards within the audits. And so we're looking at that to make sure the auditors classify the revenue and the expenses within those accounts. So that's really important for us, so that we can compare it to the budget numbers, the amounts in the budget. It's the same accounts that we have in our funding applications, and so it's consistent all the way across. So we do look at that the amounts are captured in the proper HUD categories there.
Right, and we'll show that more in the examples of Exhibit A and C, but all the chart of accounts need to be properly documented. All right, we'll go to the next page. So starting here on page 7 of the handbook, the auditor's responsibilities. A lot of the attendees here today, I know from your email addresses, work at CPA firms or accounting companies. This is your page that you need to know, and obviously I'm sure you're very well aware of it. It's not any big surprise. So, but it is here in the audit handbook in case you need to roll through to see how we require the submittal, including the signed pages and that sort of thing. All right, can we go to the next?
Yeah, so one of the things we do want to point out, we're not going to cover everything, but the auditor must adhere to the performance standards, opine on the financial statements, including the notes and supplementary information, examine the tenant files, report on compliance, and also report a schedule of findings. And then if any
you'll see all of that in the Appendix A. It goes in with the notes and the supplementary information. As we said, that's going to be required. You'll see a good example of it. And by the way, someone asked, will we be posting this slide deck? It's really just, it's a PDF, but we will post it to both of our websites shortly after the webinar here, and along with, if we create a frequently asked questions document. So this will be available to you. George, can you enlarge the screen size a little bit? There we go.
The text?
Yes, please.
Oh, sorry. I thought we were at... There we go.
All right. So we are on notes to financial statements and supplementary information. These give more details about the notes and what is required. The details on the 3 appendices are restated. We already went over that a little bit here. As previously stated here, we need a 2-year comparative presentation and side-by-side formatting. The bifurcated audits is going to actually be required in landscape formatting now, because there are 9 columns wide. So when we get to Appendix C, you'll see what that looks like. But in Appendix C, you're going to need to have appropriate data that bifurcates the assisted units, non-assisted, and total, all 3 columns. But again, still side by side. So that's 6 columns right there, and we'll go over the rest of that when we get to Exhibit C. So if we can then go to the next slide, please, or the next comment. These are a number of pages here that has the requirements for the additional notes and supplementary information. And it scrolls through for quite a few pages, and they are fairly detailed, but these are really some of the nuts and bolts of how the project owners, our sponsors, and the CPAs should work together to provide all of this detail. And I know it gets kind of granular, so we're not going to read through it, but you do need to understand all of this. Just hitting the high points on the notes. Note number 1 here says organization and nature of activities. We need the CPAs to verify who controls the organization, the entity that has ultimate control. So that's one of the notes that we're going to be asking for. And that's a little bit new. We've never really requested that as in such detail, but we're going to need that now for a variety of reasons here at HCD and CalHFA. So we're asking you to please read through that and supply the data and information about the tax credits, the year built, the year placed in service, the dates, that sort of thing. Point number 2 actually runs A through J. The next comment.
Let me just make a comment about the organization. Yeah, that the tax credit projects, the place in service and the rent floor, that's important for substantiating, what the rent and income limits are. And so that's, it's really important information, project information that we'd like to see in the audit as well. So if we, let's just to reiterate that requirement in footnote 1 there.
Okay. There are a number of other items here. You do know that our basic accounting method is the accrual method. We were just having a chat here. Okay. That's in number 2. Capitalization policy needs to be detailed. Item G, which says tenant and revenue recognition, we are asking that you put the manager units as part of the gross potential rent, and you can expense it out to balance it, but don't just give us zeros, because our data at HCD, we do want to know what 100% gross potential rent would be just for our data collection purposes and analysis. And we have changed something where our miscellaneous threshold is been reduced from $2,500 down to $1,500. We're needing more detail, so we don't want you to put miscellaneous and then just say other or miscellaneous again. So we do need more details. So please break it out all the way down to 1,500 or greater should be detailed according to the correct HUD code of accounts. Rather than 2,500, it's down to 1,500.
So Steve, one of the, excuse me, just to reiterate on the manager's unit, we want to see the manager's unit or any rent-free unit revenue within the gross rent potential. And then if it's rent-free, obviously you got to show the operating expense to offset that revenue. But for all manager units, we want gross revenue to include all the units. It's kind of a clarification or maybe a new requirement that we want to see that manager revenue within the gross rent potential. The 1,500 or greater, there's an update, there's a new worksheet to capture the miscellaneous, and Steve will cover that later.
All right. The next note on J also reiterates that operating expenses should be detailed at 1,500 and above, and we will get to it in Appendix A and C. They'll have a miscellaneous schedule breakout. The supportive services costs is the next note under J, and what we need here is supportive services cost has become quite an important expense in the operation of affordable housing nowadays. And please be aware that our uniform multifamily regulations, the UMRs, has some limits and guidance on how much can be funded out of revenues. But in your audit itself, please follow the guidance that's in this section, in this paragraph of section J, subsection J, so that you can be presenting it properly. The next note here, subsequent events, that just refers to anything
Steve,
that. Go ahead, George.
On supportive services costs, one thing that project owners and the auditors need to be aware of is there are limits. Limits stated in the regulatory agreement, limits stated in our UMRs, if the project is subject to the uniform multifamily regulations. And so, those limits need to be included in the preparation of the audit. So we have 4 categories of supportive services costs that these limits fall into, and so we're requiring that the costs be reported within those 4 categories.
All right. So our next item that we've highlighted for you to make note of is subsequent events. If anything happens after the end of the fiscal year, but the auditor is aware of it prior to completing the audit, it should be noted in the notes or supplementary information areas of your audit. We do allow a 45-day grace period for the use of the reserves, because if an expense is accrued or a required bill is something is billed at the end of the year, but you haven't actually paid it by December 31st, or the end of your fiscal year, June 30th, you get that 45-day period to reconcile your reserves. But please don't go past that. We get a request every year by a couple of projects saying, can we go past that? Please take care of that prior to it, so it falls within the accounting rules that we're going to be following. The next
I don't know if we covered related party transactions all that thoroughly, but there is quite a bit of information we want on the related party transactions and fees schedule. We want the name of the fee, the legal agreement requiring or permitting the fee, the fee amount, if maybe possibly the method of calculating the fee, if there is a calculation involved, the fee limits, as I just talked about, the HUD account charged, and the description of the relationship. And then we have deferred developer fees, which they can be either identified or categorized as permitted as a priority cash flow payment or payable from borrower's distribution. So we need to know if there's a deferred developer fee balance on the project, is that permitted as a priority cash flow, or is that payable from the borrower distribution? So that needs to be identified in the audit. for deferred developer fees.
And the difference between those two, priority and non-priority deferred developer fees, that will be in the regulatory agreement. At least at HCD, we've put that into regulatory agreements over the last few years, but some of the older regulatory agreements might not have that. But on the other hand, your deferred developer fee may already be paid off completely by now. All right, restricted funds is our next note. And if you do have a COSR, remember that is a type of reserve account where all reserve accounts should be detailed in accordance with item 4 here. Let's move to mortgage notes payable. Again, here's the information. And again, this is typical for all the items that are needed. Interest rate, the maturity date, whether it's mandatory or deferrable or deferred, accrued interest, balance, all of the good stuff that you're used to using. This is the note for that. And then we get to note number 9 here, distributions of operating cash flow or surplus cash. This is, of course, the final thing that you'll see in the appendices. This is basically what we use to determine. It's the final step in use of operating income, as we say. It's really important that you make sure that you have any notes or supplementary information to support your documentation in the audit and the figures and amounts that you use. We use this to compute the amount of asset management fee, deferred developer fee, distributions, which is the sponsor's retained profit for the year, and residual receipt payments, which are the loan payments to HCD or any public agency lender. So, and of course, it's subject to approval because we also have to take into account other items that might be in the regulatory agreement, any impound accounts, any timing differences, any priority use of cash flow, replenishment or reserves, all of the things that we do to analyze comes down to making sure that this calculation is correct. And then it goes into our audit approval letters that we send out to the sponsors.
So one thing, Steve, that you touched on the timing differences. So timing difference exceptions related to replacement reserve withdrawals and capital purchases will be considered if within 45 days of the end of the fiscal year, and these differences must be clearly identified and noted. So it should be noted in the audit, and it must be. And you know, from one audit to the next, if there's timing differences that flow from one audit to the next, it should be connected. It should be discussed in both years' audits if there's timing differences regarding replacement reserves.
All right, so we are now at the basically the end of, and then the next note, just so you know, number 10 is in regards to the CalHFA administered Section 8 projects. So if that is something that is applicable to the project you are working on an audit, please follow that note. Again, as was mentioned earlier, it's a fairly small portion of the CalHFA portfolio, but if it's applicable to you, there's the note. And so in our audit handbook, that brings us to Appendix A. So before we move forward with the Appendix A, which is a sample audit, basically in its entirety, we're going to look at the
do we have a poll, Steve, or were we able
chat?
to put that together? Were we able to put a poll together?
I'm not sure how we're gonna put that out right now, so we'll just maybe we'll do that as a conclusion, but for now we'll skip that. We had a couple questions. If you have a city loan and it's no loan from HCD, even if it's from HCD's CDBG, the Community Development Block Grant Program, which is part of our federal Division of Federal Financial Assistance, you probably would want to follow the audit handbook. But you're also going to want to make sure you provide the city what they want out of their requirements. These are coming from the chat that we're going to try to respond to.
Yeah, so CDBG, we deal with primarily the state side of HCD. Now, you'd have to look at the regulatory agreement or the agreements that you've signed for the CDBG funding and see if there is a requirement to submit audited financial statements. And
right.
then if there is, then I would check with our CDBG folks and see if they want it in compliance with our audit handbook.
Right. So if there are any other questions, please put them in the chat now and we'll get to them. Let's see. A full year audit was required, so it sounds like the supplemental information should only be for the period from CalHFA loan closing and the year end. If you're going to be submitting to CalHFA and even to HCD, if there's less than a full year from the time of perm closing until the end of your first fiscal year, contact your asset management representative from CalHFA or HCD as applicable, or both, if they're both in the project, and make sure that you're clear on the requirements for that first audit. You should probably be able to find this information out in advance of loan closing even. It's as you move forward through the loan closing process, you should be able to get that information. Here's a question. What if the details of the fees are confidential inside of the contracts? Do they still need to be displayed in the footnotes? Because they could become public if they were in any way requested through a Public Records Act, a PRA request. I understand. That's a very good question. I may have to, that question has not come up to me personally. I don't know if anyone else has the answer here on the HCD or CalHFA teams and wants to answer, but that sounds like something that we will ask our Legal Affairs Division, the PRA team, and then we would be able to post that as part of our frequently asked questions and get back to you. That's a very good question. I think we might be able to say the generic cost might be what we should get from you at the very least if we don't get names or company names or something like that.
So one of the things we want in the fees, it's in the related parties table. So we want to find out, we want to have transparency on the relationship, related parties regarding fees. If you have concerns about confidentiality, please reach out to us and we will help you in more detail on your concern.
All right. What are the 4 categories for supportive services topics that are covered in this presentation? That is in the chat. And actually, we're going to go through that in short order here when we get to that section of Appendix A that we're going to be walking through right now. The PDF file of the audit handbook that is on the website right now does not include these comments, but we will post this particular PDF with the comments after the meeting. So thank you, Karen, for that comment, and you will be able to get that, but we just didn't get around to posting it here before we started, so we will have that up right after this webinar ends here. Okay. All right, it looks like that's all the questions we have so far. I'll take that as a good sign that we've gone over some material that you're aware of and ready to go on. So we're going to launch into, and in fact, Raymond, one of the managers here in AMC Fiscal, he also put a link in the chat about the 4 categories for the supportive services. So now we're going to jump right into Appendix A.
Okay.
All right. So for the, just so you're
Steve,
aware,
let me just say Appendix A was, we took basically some of the accounting, the auditor's report and things like that, and what auditors put into their audits has been updated. The information's changed and it's updated, and it may change in the future. These are illustrations only. We've updated the sample, this Appendix A sample project, to more closely align with what current financial auditor reports are, and so on and so forth. So that's one of the reasons, and just to point out that the Appendix A is a new Appendix A from the previous handbook.
all right. So now let's move into Appendix A, and the first, just so you know, the first couple of pages have the independent auditor's report. Obviously, it's something all the auditors are aware of. This is just, like George said, sort of an updated version of it. So it's a little more in line with current best practices, the independent auditors report. And then we'll get to balance sheet. As you can see, we've got year over year, what we call a side-by-side 2-year comparison format. We've labeled everything 20YY or 20XX, just so we didn't put 21 and 22 or 22 and 23, but you get the idea. This is a real clean version. You'll note right there, as under restricted cash, it says note 3. This is where we like to see what part of your balance sheet is going to relate to what note that you are going to put into your notes and supplementary information section. So please do use that as a reference guide for our staff who are going through your audit to analyze it for approval. Next comment will bring us to the notes section. This again is a good example of providing information about the organization, nature of activities. This says when the tax credit information, when it was developed, the ownership organization, that sort of thing. So it gives a very complete detail. Note number 2 talks about the accounting policies. Note 3 is for restricted cash and all your reserves, and then it goes through. You can just read through this on your own, note by note, but these are real good examples of how the auditor can indicate what has been reviewed and how you test the system for accuracy in the financial data that you're presenting.
Yeah,
and again,
one thing, yeah, this does
ahead.
not have this Appendix A or this note. It would, if you had a coaster, it would discuss the capital operating subsidy here as well. But in this particular example, we don't have a section here for the coaster.
Right, but if it was there, it would be under item 3, note 3 for restricted cash. Now, again, if you have different notes, more notes in a slightly different order, as long as they're properly labeled, that's what we want to see. As you'll see in note number 8, it says other matters which are significant issues. This is probably where you also would want to put any findings, recommendations. If you don't have that as a separate call out, you'd want to make sure that it's in there. And then note, even as you see that in the notes payable section of note 8, it's a side-by-side year-over-year format. The other matters, that's where you want to let us know what else there might be that's important that affects the project or the information that you're presenting. And then on number 9, that distribution of surplus cash, again, it should follow the regulatory agreements so that it is very clear that all of the use of revenue follows the waterfall of cash, as we call it, or the revenue cash stream, so that, as we say, we're all on the same page, income minus expenses, and eventually we get to the distributable cash, which is, upon approval, going to go for sponsor distribution, borrower distributions, and the residual receipt loan payments to all of the public agency lenders.
So Steve, there's a couple questions about when does the handbook apply for which fiscal year's end?
So this is going to apply to all fiscal year 2023. So if you're still working on something that was a fiscal year 2022, there are a few, as we say, stragglers who still need to get those in. But for all fiscal year 2023, and typically that would be starting, if your fiscal year ended, it was from July 1, 22 through June 30th of 2023, your audits are due starting October 1st. This will apply. Now, most likely there are not going to be any that require a bifurcated audit, but this is going to be something that hopefully you'll be able to incorporate before you submit the information and the sample and the style of the details that we need in our audits. Some of you who may be a couple weeks early for that October 1st submittal deadline and have already submitted it, we may just get back in touch with you and ask you for a few extra details. We'll really hope that everyone incorporates the requirements and formatting styles that the new revised handbook shows in this round of 2023 submittals. So
Steve, I think
it does take effect now.
There's a comment here about the balance sheet. I guess the illustration of the balance sheet is it breaks out current assets and current liabilities. Yeah, I mean, the balance sheet is not conforming to the balance sheet within this new handbook is not as critical as maybe I would say breaking out like supportive services costs so that we see that the limits are you're in compliance with the limits. But the balance sheet, because of the lack of time to maybe reconstruct the balance sheet, that's probably not as important. But if you have questions concerning where you're at with your audit and complying with the handbook, because reach out to your asset management rep and we'll work with you on that.
Yeah, we know that this is coming right before the submittal, so we'll work with you on it, but we do hope that most everyone can afford this. George, I sent you a text. All right, so our next next we go to what's our next item is supplementary information. Again, this is going to be the backup with the real breakdown of Oh, you just lost your, there you go. The breakdown, the year by year comparison, revenues and expenses. If you just scroll down through that page.
Whoop, sorry. I'm trying to find your text, Steve.
Don't worry, it's on, forget it, don't worry.
Okay. Okay, so let's scroll down. This is the revenue. These are the chart of accounts and the HUD descriptions for those accounts. And where did you want me to go, Steve?
And we do require that you stick to these chart of accounts, please. And I was hoping that if we get down to the supportive services, we would be able to show people the four.
Okay,
So
that would be probably under the miscellaneous account detail here. Okay, so
schedule of operating on page A25. Schedule of operating expenses. Oh no, I take it back. That doesn't have all four. It is on the miscellaneous. So we can move to the schedule of miscellaneous account details.
So all the supportive services costs go into 6990, and then we have a new miscellaneous detail worksheet where we capture a breakdown of the miscellaneous accounts that are above $1,500. Go ahead, Steve.
So this is how we would like to see your miscellaneous account. As you'll notice, anything that says other is a very small number. Last year in year 20XX, it said 2467. We don't want to see numbers over 1,500 at that point. We would like you to give as much of the details as possible so that we can make sure, basically we're looking for eligible expenses, and it will, as we move forward with our programs that are more and more often are getting capitalized operating subsidy reserves, COSR funding, it's going to be more and more important for HCD and CalHFA to get the expenses detailed so that we can determine eligible expenses for COSR disbursements. If you scroll down just a little bit more, you'll see the miscellaneous supportive service costs under account 6990. And here are the four categories within 6990. We do want you to split those out exactly as shown in this sample.
Yeah.
Yeah, okay. The chart of accounts is the standardized. There was in the chat, yes, it's the standardized HUD, not HCD, the HUD chart of accounts is what HCD and CalHFA use in our audits. All right, so that's the miscellaneous breakdown.
One of the questions is it a requirement to have the miscellaneous schedule of miscellaneous account details? If you have your audit and you're kind of using the old format where you have a breakdown of the miscellaneous underneath the account like we had in the prior version, that's acceptable. We prefer on a separate worksheet, but the old format is fine, just as long as you break it out and be aware that the threshold changed. It's reduced now to 1,500, where right, the prior handbook was 2,500.
Yes, there is a HUD chart of accounts. We'll try and post that for you too. So our next category we'll review here is the supplementary information. And again, this is something you can scroll through on your own, everyone, but it includes all of the extra items that you need to detail out regarding accounts receivable, mortgage, equipment, accounts payable, management fees, all of the other items, and then we will eventually get down to the final pages of the supplementary information. Ends with the computation of excess distributable cash. Again, this is the one-page document that really should match our calculation, which becomes the primary tool we use in determination of sponsor distribution and residual receipts. So this is the item that you need to really be clear on, and it should, again, tie in with all your notes, all your supplemental information, all your miscellaneous expense details and revenue details. Everything should come down to this, and it would be this one page. And then the last of Appendix A, the last couple pages, which is the next item, is the signature pages, and we'll make sure that if you are working on it as a property manager, plus the owners need to sign, the auditor has their final report. This is also where we've seen in our sample, it has the auditor findings and recommendations. All of that is important information that HCD uses, this last internal control and report on compliance and other matters. This really is important. It's things that show up in the auditor's general work, and it's important to HCD and CalHFA to review this information and then work with the sponsor on clearing these financial findings. It's very important to keep the books in order. All right, this ends Appendix A. So now, before we go into Appendix B, we'll see if there's any other questions. I know that we've been doing, I think, fairly well with keeping up with the chat column questions and answers. Someone asked for a chart of accounts, and there is a link that was just dropped into that. The question of, is a classified balance sheet required? Again, that's the one that we're going to need to get back to you on, to see if Legal Affairs or Public Records Act team says that this is something that's required, or how you should best handle something like that. All right.
So I think there was a question on the supportive services expense in excess of the regulatory limits or UMR limits. Is this supportive services that are not eligible to be paid from operating cash too? Yeah, whatever's been paid for an expense in the accounting records needs to be captured in the schedule of operating expenses, but the cash flow will limit the deduction, or that supportive services cost would be reduced in the cash flow calculation to whatever the limits are. And so
all right. We do have another question here. Can you clarify the supportive services expense? Again, there's a note that it is in regards to the uniform multifamily regulations. It's the UMR's 8314 point something. That's where the limits are, and there is an escalator built in year over year increases. So that's something that you can reference. And if it's not directly in your regulatory agreement, it will reference that you should go look at the UMRs, and those are on the HCD website as well. Question, does the schedule of operating revenues and computation of operating cash need to show both years? Yes. Can we show only the current year? Only if you want us to get back to you and say, please revise your audit, because we do want the year over year. What we're looking for here is explanations in the notes as to if there was exorbitant increases, why the costs went through the roof or the revenue sunk through the floor. We need to know what's going on at the projects, and looking at financial reporting is one of the best ways that the AMC fiscal section has to monitor and provide technical assistance and guidance to project owners. So that's why we definitely need the side-by-side 2-year comparative presentation.
So there was a couple questions on, can you walk us through the example on Appendix A, the final summary? I'm not sure what you're referring to by the final summary, if you're referring to the
do the
cash
computation.
flow.
Yeah, the computation of excess cash. We'll get to that in just a second here.
Okay, and then there is an emphasis of matter paragraph for related parties. When are you specifically looking for this paragraph to be included? I don't know. I don't know if we want to open this up to the accounting professionals.
I think what we're talking here about is if there has been any structural change in the ownership, new loans to the property. It's the sort of thing that if you read through it, you'll see how they've presented the sample. That is really a good sample that covers the topics. It is in your both prior to, it's in the handbook prior to Appendix A, and then there's a very good sample of Appendix A.
Okay. Yeah, I think it was in the notes where we put, here it is here. As discussed in note 1 to the financial statements, is controlled by its general partner, which is a nonprofit. You know, and so the question again was, if in the auditor's report there is an emphasis of matter paragraph for related parties, when are you specifically looking for this paragraph to be included? I think there's some standards, some CPA standards on emphasis of matter.
And we will leave it to the CPA's judgment. They have to follow their guidelines, generally accepted government auditing standards and all of that. If there is a change to the ownership structure or the project financing that makes an impact on expenses because they have a larger mandatory debt to a lender, if the accrual of interest is at a high interest rate because some public agencies filed a notice of default and started charging them 10% interest for the months that they were under a default notice. I mean, those sort of significant items that impact the project or the ownership structure should be mentioned here.
So this George, is a new section on in the audit emphasis of matter. If any of the accounting professionals want to opine on just general guidance on emphasis of matter, we can read that if we get anything more. Okay.
Yeah, and if you put it in the chat, we might be able to put it into the frequently asked questions as one of the contributions. George, can we go to the computation of excess distributable cash, that last page, and we'll do a quick walkthrough before we do Appendix B and C, because we do want to get to that. You know what? Let's skip that and go to Appendix B, because we're going to walk through it again at the end of Appendix C.
Okay. Sorry, I gotta scroll through here a little bit.
Why don't you just click the one before that, and that's going to be the start of Appendix B. And we're going to turn this over now to Christina Green and Christina Meza and Jennifer Silva of CalHFA. They did not name their example Suncourt apartments. They called it sample apartments. And Christina, are you able to share? And George can turn his camera off.
Well, actually, to save time, I just want to indicate that for Appendix B, this is for a small portfolio of projects. It is for projects that have project-based Section 8 that is either administered by CalHFA or the audits have to be submitted through the FAST system, the financial assessment subsystems with HUD. There's very limited amount of projects that require this. So to save some time, if you have a project that is administered by CalHFA with the project-based Section 8 contract, or if that financial statements needs to be submitted through the FAST system, please contact your asset manager at CalHFA, and we can go ahead and walk through it just to save time to go through Appendix C, which is what we really need to cover at this time.
All right. Thank you, Christina. If you do have any questions, you can put this directly in the chat for CalHFA, and it will get to them. So thank you, Christina. We'll go to Appendix C, and you can pitch in, Christina, anytime as well. So if we go to the next, so again, this is the bifurcated audit. Bifurcation between assisted units and non-assisted units. So if we can go to the next slide here.
Yeah, so let's, I just want to point out that these schedules, if you're required to submit bifurcated audit, these schedules will replace the same schedules that are in Appendix A. And so we've kind of listed those pages in these slides here. I thought we did.
So,
yeah,
they are in the note. Pages 822 to 8. Yeah, 822 to 827 are the schedules that will be replaced by this format. Now, we're calling this either a 7-column format or a 9-column. The 7 columns that is the new format that needs to be presented is column 1 here is actual or proration, and columns 2, 3, 4 is for 20YY, and the next 3 columns are for the year 20XX. What we've done is a column for the COSR assisted or annuity assisted units, the other units, meaning the non-COSR assisted units, and the grand total. In our example, 20 units are COSR assisted, 60 are not, and that's a total of 80 units in the building. This is a prime example to be used from the HCD perspective on the No Place Like Home program. And that has a regulatory agreement, regulatory requirement of no more than 49% of the units unless the building is 20 and under units. So this is where we chose an example. 20 units divided by 80 units is 25%. So if you see the word in this actual or proration column that says proration, you'll know that 25% of the revenue of that line item or 25% of the expense of that line item is a prorated dollar amount as opposed to an actual dollar amount. Now, in the guidelines for No Place Like Home, it specifically says the shortfall of revenue compared to expenses attributable to the COSR assisted units. So that's why we want, to the greatest extent possible, the actuals, and you have to keep the supporting documentation if we ask for it. But if that's too difficult, and we know it's not easy, it's going to be a fairly difficult item, and sometimes it's infeasible to make that distinction, then we'll go with the prorated amount, and in this example, it's 25% across the board. So for example, the maintenance contract, you can't just attribute it to how many units are clean compared to not. But if you can attribute an expense of repairs to the COSR assisted units compared to the non, then do that. If you can't, then fallback position is use the prorated method, and we'll basically, if we have questions, we'll ask, but generally speaking, that's going to be acceptable. It is what's used in underwriting as well. So if it's used in the audit, we're going to consider that that's in compliance with our No Place Like Home guidelines. All right, so here is, again, the 7 column display. This schedule of operating expenses, it's called
So-
bifurcated schedule of operating expenses.
Steve,
And
can I
this is
make
how
one
we're
comment on the revenue?
displaying it. Go ahead.
Okay, on the revenue for the rent, you're going to be using actual. We want actuals for the rent. The expenses, it's a major lift, heavy lift to try to break out, actual expenses and then deduct the actual and then just prorate the remaining balance of some expense line item. So, but for revenue, just like in underwriting, we want the gross potential revenue of those assisted units. So revenue's a little different. And then the vacancy revenue for those assisted units should also be actual. So go ahead, Steve. We'll go down to this bifurcated schedules of operating expenses. We've got the proration listed up here. We want to make sure we capture the number of units in each column. Go ahead, Steve.
Right, and then fill in the correct information, the correct dollar amounts. You can keep on scrolling down. Again, these are all the HUD chart of accounts. You've got your utilities expenses, your operating expenses. Again, like taxes, that's just going to be a straight taxes and insurance, straight proration. You can't really call those out as actuals. Same with financial expenses. And then let's get down to the next page, which is the breakout of the supportive services. It should be broken out in the miscellaneous, but where we will have those 4 categories again, which we showed you in Appendix A.
Yeah, and
You'll
one other
note-
thing about the expenses is, with these coasters, the HCD coasters, from program to program, there's differences in what is an eligible expense for the assisted units. So it's not a one size fits all for that. We take all the expenses and you just prorate that into the assisted units. Some expenses are not allowable for determining the coaster cash flow calculation. So you need to understand, what's allowable and what isn't for expenses.
And that's one of the things that HCD and CalHFA are going to review as well. So please do break it out. Like we said, down to the $1,500 threshold. This example may have higher amounts. You can see that the 2,959 is broken down lower and lower so that we get the full detail. So we go from assisted bifurcated schedule of revenues to expenses to the miscellaneous and then to the support services. Again, we've got the, if you can go to the next one, George, which is the miscellaneous breakout. Here for the support services, breaks out the 4 categories right there. Same as in Appendix A. Again, these schedules that are included in Appendix C are the ones that will replace A22 to A27 in the handbook, the schedules listed on those pages. Let's go to the last page here, which is the bifurcated computation of excess and distributable cash. Now here we do not have the 7 columns. We have 2, but it is not year over year or 2 years side by side. This is, even though it's a bifurcated computation page, what we want is the current year, but bifurcated between coaster assisted units or annuity assisted units and the total project. So that's where the 2-column format here is different, but specifically as required so that we can find the positive cash flow or negative cash flow attributable to the COSER assisted units. Now, in our example, we have 50,705 negative cash flow, even though the operating cash flow on the entire building is a positive, right? The COSER disbursement is still eligible to the project for the amount attributable to the COSER assisted units, in most cases, subject to a variety of other guideline and regulatory requirements that HCD and CalHFA will need to analyze. I'm not going to just blanketly say, oh yeah, we're going to cut a check for 50,705 on this particular example. But that's what it's leaning towards, is that the difference between those two assisted units category and the total project category must be clearly displayed in this final page. And again, as a walkthrough, it's just like what in the HCD regulatory agreement is called use of operating income. You start with your operating income, less vacancies, less expenses, less other activities for your mandatory debts and reserves, and then you're going to get an operating cash flow. And then beyond that, the breakdown of asset management fee, maybe there's deferred developer fee, and then the cash available for distribution goes to, you lost your page, George. Then it goes to the amounts payable to residual receipt payments, to borrower distribution and residual receipt payments. The properties that are going to require a bifurcated audit are typically going to be on a 50-50 split. So that's what we used here in this sample.
We had a question about what are the limits. So this is the UMRs. Okay. And it goes down here to the supportive services it's 8314E. And so this is where the units are discussed in the UMRs. Now, you got to make sure your project is subject to these 2017 UMRs. Not all projects in our portfolio are subject to these limits. Now, CalHFA may have their own limits. So check the regulatory agreement. You can refer to 8314E as well to better get familiar with the limits on supportive services costs.
All right, so that concludes the walkthrough of the actual handbook. You need to get that back on the screen, George. We did have a question here that is directed to CalHFA. We've been using the MHSA supplemental form as the template for bifurcation of COSER units. Do we now have to switch to Appendix C for bifurcated audits? So Christina and CalHFA team, can you respond to that, please?
Yes, so the auditors will be doing the Appendix C on the audit. We are still requiring the borrower/developer to also complete the supplementary form as well.
All right, thank you. Just to confirm, and actually with what is now being noted as a typographical error on this last page, it should not say, no, at the top, George, it should not say years ended 20YY and 20XX. We'll replace that. So that was a good catch by Melissa Chung. Thank you. It should be for the current year, bifurcated between the assisted units and the total project.
And we did have a comment from our auditors, auditing community, accounting community. Emphasis of matter is typically at the auditor's discretion. The example in the handbook is to draw attention to the related party that controls the partnership entity. Many of these partnerships are under a not-for-profit developer that would have to consolidate them due to their control. So
Now, we're not asking you to help them consolidate. We just want you to determine and make note of who does have the control. Yeah, so we don't need partnerships to change things. It's just that they should go, and it should be part of the audit now.
any other questions that that you see? We're
And
Well,
the question here
closing in
about
on
pest control at the very end, yes, you can use that as a call out of actuals. Just make sure that we, you may as well submit a copy of the invoice or the payment receipt, because likely we would ask for it to verify. Why are you saying that there's a $15,000 contract for pest control, yet there's also a $6,000 call out for pest control? We would want to know why there's is it a duplication? Is it a mistake on your part that it got into the audit? Or if it's correct, we would ask you. So yeah, just be aware that that is a good example. Actually, thank you for bringing that up, of how to indicate that there is an actual expense noted to the COSER assisted units, so that we can use actual instead of proration, or in this case, maybe both, or partly this, partly that. But we would need some real detail so that we understand it, so that we can apply that to this final schedule of expenses, and then to this final computation of distributable cash page properly. All right, very good. So at this point, we're at the end of our hour and a half. I would like to thank all of you for attending. I believe we had something like 300 people here, or almost 300. Very well attended. We will be trying to put together frequently asked questions, as well as post the PDF as you've seen it here today. So it's got these hyperlinked comments to the yellow highlighted items. So just like you can see where it says revised September 2023, if you clicked on that, you'd get the comment. If you clicked on the comment, it would take you to the hyperlinked words, or you can just click down the comments and it'll help you scroll through. But you do have to be, as project owners, asset managers, property managers, bookkeepers, and CPAs, you have to be aware of all the rules throughout the book, not just what we've hyperlinked. This has been an overview, sort of high level, to get you through the presentation, but all the rules are applicable to these fiscal year 2023s to the greatest extent possible. If you're having any issues with complying with this handbook when you submit your audits that are coming up due in short order here, please reach out directly to your AMC fiscal or staff representative, or your CalHFA asset management representative, and we will work with you on that sort of thing. So
I might say one other thing, Steve, before we close. Couple things. The table of contents on Appendix B and C are not, there's no links, there's no hyperlinks to the content. Again, submit Schedule C, these schedule operating expenses and revenues in landscape mode. It's just impossible to see if it's in portrait. And then the other thing is, for auditors, we encourage you to take a look at what the approved budget amounts are in calculating your cash flow calculation. Oftentimes we will see amounts in excess of what is approved in the operating budget. And so I encourage you to look at the approved operating budget. I think project owners, we do an AR summary. We take this audit information, capture it in an annual report summary worksheet, and you receive a copy of that with our cash flow calculation. I encourage you to share that with your auditors, so that maybe in the subsequent year they have a more accurate cash flow presentation. And so a couple of additional items there.
All right. So for our last question, is the home key program covered under the handbook? I don't think so. That's part of our state grants management, but if they tell you it is, then it is. So you should check in with the representative who handles your home key project. Again, thank you all. Thank you to CalHFA, to Christina and her team, Christina Meza, Christina Green, Christina and Jennifer Silva, who worked with us on preparing the handbook and the webinar, George for handling the presentation, for the AMC teams that have been helping cover all of the questions in the chat box. Thank you one and all. We will send out an announcement to everybody who was invited to this once the website is updated with this posted presentation as well as the frequently asked questions. You'll all get a notice that it is available and ready for you to download. So again, on behalf of HCD and CalHFA, Steve Marshall here signing off. Thank you all. Have a good afternoon. And thank you for complying with the handbook, and good luck on everything for the affordable housing projects that you operate and report on. Bye, everybody.
Thank you.